Hello guys, welcome back to my YouTube channel. So today we are going to discuss a very interesting concept about getting started with the money market fund in Kenya. So let us jump straight into it. As always, our first question is, what is a money market fund? We define a money market fund as an investment scheme that pulls money from investors to invest in short-term, low-risk financial instruments. The entities that are running the MMFs are then called fund managers. So if you have happened to register for an MMF, or if you are planning to register your money into an MMF, you need to understand that many other people are contributing to the same MMF to form a pool of money, which the fund manager then uses to invest elsewhere so that you can earn a profit or an interest. So let's proceed to understand deeper some of the related questions or concepts that are very crucial to the operations of MMF in Kenya. So the first question we ask, why do MMFs exist? And so the reason why MMFs exist are varied. Okay, I can say that one of the most significant reasons is that in the financial system of Kenya, there are various investment options. We have got shares, we have got bonds, we have got T-bills, we have got futures, swaps, and forex. These investment options have got a certain degree of risk, and a retail investor, to mean a normal investor, might not be privy to all these types of risks. You might just be persuaded to invest in a stock simply because you saw the trend of the prices increasing. You might be persuaded to invest in a T-bond without you understanding the duration of the bond and how much interest you are going to earn. So such such knowledge is lying with the fund managers. They have extensive knowledge of the market. The fund managers are actually complete corporations. They have risk analysts, they have financial experts, they have accountants, they have the software and the technology and the capital to analyze the market, to understand the market, to understand which one is a real trend, to understand which one is just an inflated trend that is going to die down in a short while. So the MMFs exist to take away this risk from an individual investor who might not have the full knowledge and full visibility of the market. So that is why the MMFs exist, to help you as a retail trader to invest in the various financial instruments, even though you might not have a full understanding of how they work. Okay, so let's proceed and now answer the question. What is with the recent popularity of MMFs in social discourse? Currently in Kenya, every corner that you go to, you will hear of people saying they have money in MMFs. There are people who are withdrawing money from their circles to deposit in MMFs. Others are withdrawing their money from fixed deposit accounts in their banks to deposit in MMFs. So, what is the reason behind this? The reason is MMFs offer very attractive returns compared to banks. Also, with MMFs, investors are now able to participate in the bonds and stock markets without them bearing the risks. Previously, before the popularity of MMFs, individual investors were finding it very difficult to trade profitably in bonds and shares. People have got money, they are very interested in trading shares and bonds, but due to lack of the complete knowledge, they always found themselves on the losing side. So when MMFs gained popularity, people realized that they can actually own bonds, own shares, but through MMFs. So then they became very popular. Now, how do you get started? So, as we have said, MMFs are run by entities that are called fund managers. These fund managers are just our typical investment banks, they are our typical banks, and they are our typical insurance companies. So, to get started, just walk into any investment bank or any insurance company and ask them about MMF. They will give you a form that you will fill. They will tell you the requirements. They will tell you how much that you need to deposit as low as 1,000. Imagine, as low as 1,000 Kenya shillings, you are able to participate in the MMF market. So your fund manager will guide you and then you will start earning depending on the interest rate offered and how much capital you have invested. Okay, so let's also talk about earning. How much do you earn? And is it reasonable? Yes, I can say it is reasonable because MMFs offer very attractive interest rates as compared to banks. But how do you earn? Once you register with an MMF and you have deposited your money, they will tell you how much interest rate that they are paying out. From the interest rate that they're paying out, of course, they will have to deduct management fees because they are managing the money on your behalf, and they will also deduct commissions from the profits and the trades that they are making. So if you take the interest rate against your amount of money that you have invested, and then you less the fees and the commissions, you will arrive at the exact amount of money that you are going to take home. But I can guarantee you that even after subtracting the fees and the commissions, the amount of money remaining, the rate against your investment will still be very higher than the bank, than the SACCO, than you trading on your own. So that is why MMF cautions you against anything that can put your money. So guys, that marks like a summary of what an MMF is and why they are popular and how you can go about them. So this is just a snapshot of some MMF rates that I gathered online. Of course, these rates are subject to change. They are never constant. They change almost monthly. So whatever you are seeing here on the screen might not be the actual truth as at the time of you watching this video. So for example, here we have Etika Capital Limited with a rate of 14.13%. Then you go to Cyton with 13.76, Kuza, Apollo, Safaricom, KCB, and Sanlam. So There are many other MMFs and the fund managers. This is just a snapshot. There are so many, almost over 30. You just sit down, you evaluate which one, and then you deposit your money. It is not necessarily about which fund manager has the highest rate. You also have to consider factors like reputation of the company. A company might have very high interest rates, but what is its reputation? A company might have very high interest rate, but at the same time they might have very high fees and commission. So you might find the rates attractive, but if you subtract the fees and commission, you remain with something very little. Another company might have very low interest rates, but they are very transparent with you. Another company might have somehow medium level interest rates, but they are very stable. They never change, they never move up, they never move down too much, but they are very stable. So, in your evaluation to pick which fund manager to go with, don't just focus on the interest rate. There are a lot of other factors: reputation of the company, stability of the company, and transparency of the company. So, guys, this was just a very quick overview of MMF. We will be doing a lot of other practical examples in the future, how the market is changing, what you can get if you invest 1,000, if you invest 10,000, how much are you getting per month, how much are you getting per year. So keep it here, and we will continue to educate each other on MMFs and many other products that are available in the Kenya's financial market. For now, I'm just urging you, please subscribe, like, comment, and share so that you'll be able to keep tab of other videos that we'll be posting in the future. Thank you so much.